Hello and welcome everybody. Welcome back to Sectors Made Simple and part 6 of our Step into Sectors series. Look how far you've come. You've learned lots about the matrix, strategies using the matrix, and how we can improve those strategies. But now you're ready to take your first steps at using our data to invest your way. So today, I want to introduce you all to another one of the tools here at Sectors Made Simple, show you what the tool is, what information it offers you, and a starting point of where you can use that tool as part of an investing strategy. While this won't be as cut and dry as the check this, check that, this is the sector for that week kind of strategy that we talked about in part 1, this strategy allows you much more flexibility, allowing you to trade your way, when you want, how you want, and is meant to be an aid, not the destination. It is meant to be a guide along the journey. So I'm excited to get to show you all this tool as we talk about the S&P 500 screener. So hello to everyone that we have watching this live, as well as if you're watching this recorded. Welcome. It's a pleasure to have you. Let's get into it. Disclaimer, whenever we talk about strategies, remember strategies are based on historical results. And unfortunately, strategies aren't a crystal ball. Past results do not guarantee future performance, so please take everything we talk about here as educational resources, trust but verify, and do your own research prior to making any investment decisions. So, today's topic. Today we're going to take a look at another one of the tools available on the on the Sectors Made Simple dashboard. It's called the S&P 500 screener. If you joined us for a webinar that we did previously, we talked about one of the parts of the S&P 500 screener, the sector averages. Today, we're going to look at the rest of the S&P 500 screener. So we'll cover what this tool is, and more importantly, how you can use it for your investing. We're not here to explain every little detail of the screener. We're here to talk about how you can use the screener for your investing. So, let's take a look at the questions that we'll aim to answer in today's webinar. The questions we'll answer today are: what is a stock screener? Why do investors use stock screeners in the first place? What is specifically the S&P 500 screener? What information does the screener give us? And what is a simple way of starting to use the screener? Let's start off very basic. What is a stock screener? Screeners are a type of tool that we can use for analysis, meaning it doesn't just spit out an answer. It lets us take in a lot of information, use that information, and gives us in return a shorter list of things or a shorter, smaller amount of information that now we can spend a little bit more time on. Think about it like this. If you only have 30 minutes in the morning to invest, maybe it's the time before you go to class, or before you go to work, or the 30 minutes of peace and quiet you get before the kids wake up. Whatever it is, it's your time, and we want to make sure that you're spending it wisely. So, instead of looking at 30 stocks, if you want to analyze 30 stocks to find one to buy, you can only spend 1 minute per stock. Instead, what if we narrow down 30 companies to 5? That is part of the goal of the screener. Because now with 5 stocks, you can dedicate 6 minutes per stock. Maybe one of them is quick. You look at it and you immediately know your answer. Nope, not investing in that. Now you have even more time. So the goal here is not to give you an answer, it's to help you narrow down your choices to save you time and allow you to take the time that you have and spend it more wisely. Now, back to the slides. Screeners often have a lot of information. That information will come in 2 different directions. We have lines. which are going to be our top to bottom list of all of the different things that we have. For most screeners, that's going to be stocks. So that's going to be each line is one stock or one security. Then, for each security, we'll have a bunch of columns of information. This information will vary, but falls into two main groups. Numerical data, meaning numbers, and categorical data, which is words. So numerical data is something like how many days there are in a month, or let's use something a little bit more closely related to stocks, price. So you could order it by most expensive shares to least expensive shares, for example. Categorical are things that are not numbers. So for example, you could say it's a stock in the technology sector. It's a stock in the communication services sector. That is an example of categorical data. We have different groups, and we can use those groups as a way of, use those groups and words as a way of putting together different companies and allowing us to filter based on those words. So again, going back to our goal. The goal of a screener is to give us a lot of information, but give us tools to narrow down that information to see only the securities that matter to us. This is a very, very simple idea that has been done many different ways. And while we already talked a little bit about it, let's go ahead and directly answer the question, why do we use stock screeners? Because finding a stock to invest in can be a challenge. If you look at the S&P 500 alone, you're looking at 500 companies. If you wanted to expand that to something like the New York Stock Exchange, you're now looking at somewhere around the order of 5,000. So instead of going through 500 companies, chart by chart, trying to find things of meaning, or looking up an individual company and seeing, do they match what you're looking for? Instead, what we can do is put them all into a big table, look at the exact same things for every single one of those companies, and then compare them all at once. And the benefit here is that you don't need to use every little piece of information that the screener offers. In fact, the majority of the time, you're not using most of those columns. And that's okay. The goal is that you focus on the numbers that matter. What numbers matter will differ depending on who you ask. If you ask my mom, the old school way of doing fundamental analysis, not a topic for today, is using earnings per share growth quarter over quarter. Looking at a company's earnings to see those earnings growing over time. She wanted those companies to have a certain number or higher. That is a stock filter. And in most stock screeners that offer earnings per share, you can go in and you can filter to look for only companies that match what you need. So that saves us a lot of time. And I actually want to do an example of this. One of the stock screeners that we've used quite a bit in Sectors Made Simple webinars is FinViz. FinViz has a screener, and we can see here all of the different ways that we can slice, dice, and chop all of these companies. We have descriptive things, so here we'll have categorical. Most of these are categorical. We have fundamental, talking about the company's values, profitability, things like that. Then we have technical, things related to their price. And I want to show you this, to show you the power of a stock screener in one quick example. right now we have 8,703 companies. If we add earnings per share growth quarter over quarter, above 15%, we now have 2,000. Let's say that we only want them to be in the technology sector. 283. You can keep going with this, but you see how we've already gone from 8,700 companies, and we added two things: earnings per share growth and sector. Between those two things, we've already narrowed it down to 283 companies. Let's look at a smaller sector, energy. Doesn't have as many companies as technology. We're now down to 58. From 8,700 to 58 by changing or looking for two numbers. Out of all of these options, we used two of them. That's why we use stock screeners. The world of investing is big, wide, and confusing. But once you start to figure out what numbers you care about, it can save us a lot of time. So now we have much more meaningful data to work with. 58 companies you can actually use. You can go through them and figure out which ones you want to buy, but it's still hard. Because at the end of the day, how do you decide between those 58 companies? There needs to be a final grade, a way of comparing many different companies together. See which ones are the leaders. Wouldn't that be nice? You could, for one, do stock screener stuff. Look for companies that match what you're looking for. But you also had the ability to do a comparison between all of those companies. Well, good news is, Sectors Made Simple, that's a solved problem. Because we've built a stock screener to give you unique data that no one else has. Give it to you at your fingertips, and today I'll show you how to do that. So the S&P 500 screener is a tool that we added last year, 2021 or 2022. It's been around a little bit. But think about it like this. The matrix is 12 different companies, ETFs, that are compared against each other one-on-one. So we take one company, one sector ETF, and compare it against all of the other 11. Then we add up all of the wins that it gets. Its short-term wins are X counts, its long-term wins are positive trend. The S&P 500 screener does the same thing. It takes every security, compares it against every other security, and adds up the positive trend and X counts. But instead of 12 sector ETFs, we have 500 companies. Instead of 132 charts to make the S&P 500, to make the matrix of sector ETFs, here we're dealing with 24,500. The end result is that because we now have 500 companies, our positive trend and X counts are out of, it's actually 499. 500 is a little bit of a cleaner number to think about. It's out of 500. And our total count is out of 998. We'll round it up to 1,000 between friends. So it is relative strength. It is a relative strength comparison for every company in the S&P 500 compared against every other company in the S&P 500. But that would be a matrix. And if you noticed, it's not called the S&P 500 matrix. It's called the S&P 500 screener. Again, one of the things we try and do at Sectors Made Simple is if there's resources that are already available, you don't want to recreate them. There's a reason that I will point to FinBiz and say, hey, they have an awesome stock screener. I've done webinars on how to use their stock screener. Doesn't mean that we want to create an identical stock screener. Stock Charts offers sector BPIs, but their BPIs are limited to the S&P 500. Instead of doing the same process with our data, we wanted to offer you something that they don't. We wanted to offer you data on the New York Stock Exchange and a BPI for the New York Stock Exchange. Our screener is no different. Instead of bringing you the same information that other screeners might offer, we wanted to bring you something that no one else offers. So in addition to the basic ticker symbol, we have our positive trend count, X count, and total counts. 499, 499, 998, 500, 500, 1000. Makes a little bit more sense in our brains. But also, here's where the screener part comes in. Yes, we give you sector. That should be obvious. We are sectors made simple. But we also give you information on their point and figure chart. If you understand point and figure, this will make complete sense to you. If you don't worry. You can still use the screener without having to worry about that. But if you're interested, we do have our Back to Basics series where I introduce point and figure in much more detail. But for today, keeping it simple, current column we can think about like our X count. It is our short-term direction of price. X is positive price direction, O's negative price direction. Exactly the same as the matrix and relative strength. Then we have current signal. Current signal is the same thing as positive trend, but for only one company. In reality, if you learn the basics of point and figure, positive trend count is really just the buy and sell signals. We've changed the names because you can't buy a relative strength comparison. It makes more sense to think about it in terms of trend instead of buys and sell signals. But now we're only looking at one company, and we can use the traditional point and figure stuff. We have breakdowns, which are sell signals, negative trends, and we have breakouts, which are our buy signals or positive trends. And then finally, we have signal date. What was the date of that last buy or sell signal? This is all of the information that the screener offers. It's meant to not be overwhelming. It is meant to give you information that you won't find in other stock screeners or other sources, letting you focus instead of looking at dozens of different options. Focus on a few, but have those few options be meaningful. Now, we give you a lot of information, but we also give you tools to be able to sort through that information. So, there are three different ways that you can filter by signal. Three different ways that you can filter using the screener. The first is filter by signal. So you can show companies that are only on buy signals or sell signals. What you'll find when you're looking at the tool is that there are double top and triple top breakouts. If those mean nothing to you right now, ignore the word double or triple, just think about breakout. Breakouts, buy signals. Breakdowns, sell signals. But you don't have to just look at double top breakouts or triple top breakouts. You can look at multiple different signals at the same time. The next option is filter by sector. Here, what we are looking for are companies within a certain sector. Companies within technology, companies within financials, and you're not limited to just one sector. You can choose multiple sectors at once. When you choose multiple options, it does not show you companies that are in technology and communication services. It only will show you companies in technology or communication services. So you can add as many or as few of the sectors as you would like. And by the way, all of these filters are optional. You don't need to use any of them. This is just what you have the option to use. Then we have filter by ticker. This is very straightforward. It will only show companies that you put into it. So, if you have a list of companies that you got from some newsletter that you subscribe to, if you have your portfolio of S&P 500 companies, whatever it is that you're interested in, if it is in the sector, if it is in the S&P 500, you have the ability to filter and search for it within this screen. And once again, you can choose multiple companies at once. That's where the screener part we can put aside. And there's one last feature that I want to talk about. Because now we put the screener part aside and look instead at the matrix part of this. The matrix is valuable, but so is knowing how that matrix has changed over time. So, the S&P 500 screener also offers momentum. Just like momentum on the matrix, momentum on the S&P 500 screener shows us how today's matrix, S&P 500 matrix, compares to one in the past. For this, we do offer certain windows of time. So the windows you can look at are yesterday, 1 week ago, 2 weeks ago, and 1 month ago. So that's where the matrix part ends. It is momentum, just like the matrix. Positive numbers means that company has gained strength over time. Negative numbers mean the company has lost strength over time. And now we get back to the screener part. Similar to the normal S&P 500 screener, momentum can also be filtered. So you can filter by sector and ticker. And one final thing that I want to mention. Everything we've talked about so far is for the categorical data. X's and O's, breakouts and breakdowns, sectors, tickers, those are all words. Positive trend count, X count, total count, those are numbers. Our screener lets you sort those numbers. So, instead of explaining all of this to you, let's go and take a tour of the screener together, and after that, we'll share a basic way that we can use the screener. So, over on our website, for the dashboard, you usually would be welcomed by the matrix. On the left-hand side of the screen, we have S&P 500 screener. I'm going to make it a little bit smaller so that we can see all of the information on one page. When you first load it up, what you will see is the matrix from today. You do have the option of seeing a matrix in the past. We're not going to focus on that right now. What we're going to focus on is just showing you what we just talked about. Columns, we're going to ignore for today. If you get really curious, click the I. It does give you a full explanation of the columns. More than we need to get into today. Filter by signal. We have breakdowns, breakouts, breakdowns again for triple tops, or triple bottoms, and triple top breakouts. If you ever forget, we do color code things here. We do like our colors. We have breakdowns, our sell signals in red. Breakouts, our buy signals in green. Our columns of X's are in green. The columns of O's are in red. So if you're not an expert at point and figure, don't worry. So if we choose, for example, I only want to see companies on breakouts, you could choose double and triple top breakouts. Now, every one of these companies is currently on a point and figure buy signal. Cool, right? Now, what if I wanted to see what the most recent buy signal was? Well, over here with signal date, if you click it, it will now sort by the oldest. You click it again, the most recent. So here we can see on October 12th, which was yesterday, we had 1, 2, 3, 4, 5, 6, 7, 8 companies go on buy signals. Pretty cool, right? And again, we do like color coding things here. You can look at the numbers, and if the numbers mean nothing to you, the darker the color, the better. Anything 250 or above will be background white all the way to dark green. Anything 249 and below will go from white background to darker red backgrounds. So again, do you need to worry about 344? No. What you can think about instead is the relationship between these numbers. We don't need to think about 344 as a number. We can think about 344 as a bigger number than 199. 613 is smaller than 746, so on. So that's filter by signal. Filter by sector does as its name implies. You choose consumer cyclical, it's only going to show you companies within the discretionary sector. And again, we can choose multiple sectors. So now, if you'll see, we have energy, cyclical, bunch of cyclical, back down to energy again. And the last one is filter by ticker. Here, your options are 500. So you can put in specific companies. Add as many companies as you want, and the end result will be a screen only showing you the companies that you put in. So once you've populated your list, you can now see those companies. You get a watch list from some newsletter, plug the watch list in here. For any S&P 500 companies, you'll get their relative strengths. So if I had to say, what is the strongest company between Apple, Nvidia, Microsoft, and Intel? Total count says Nvidia. Short-term strength says Nvidia. Positive trend strength also says Nvidia. Nvidia is currently in a short-term thumbs up. Don't even need to think about it with X. Green box, thumbs up. Red box, thumbs down. Short term, thumbs up. Buy signal, sell signal, buy signal, thumbs up. When? Tuesday. There's plenty of information here to make decisions. There's little enough information where every little thing here has meaning and should be very clear on how and why it can be used. Once again, we have the sector averages. We've gone over this in a previous class. These are the numbers that it uses. I mentioned before how the sector averages, if you're interested in investing in companies within sectors, is your best friend. Reason is because we look at the relative strength of every single company, and we take those averages to get this table. So the biggest company in the S&P 500 and the smallest all matter the exact same amount. They are all graded 499, 499, 998,000. Finally, we have momentum. We can use this as a tool to rebalance all portfolio. If your portfolio consists, so keep in mind this is only for the S&P 500. So these are the 500 companies or 499 companies in the S&P 500 that we have listed here. If your portfolio has things that are not in the S&P 500, you would need to use custom matrices. Coming soon to a step into sectors near you. But for right now, this is limited to S&P 500 companies. If you already know about custom matrices, or if you want to jump ahead, and we haven't done the custom matrix step into sectors video yet, we do have lots of webinars available within Sectors Made Simple to learn about custom matrices. But custom matrices will be your best bet. Over here, you have significant number more companies to pick from. I think there's 9,000, something like that, stocks and ETFs. So, finally, we have momentum. It should be pretty straightforward. We can compare against the previous day or previous week. Negative numbers are losses, so its relative strength has gone down over time. 0 is 0. Positive numbers means that it has gained relative strength over time. That's all there is to it. Here, once again, you're more limited with what you can sort for. You can sort for ticker, so again, if you're interested in things that are gaining strength or losing strength, you can plug them all here. So once again, we see NVIDIA, since 1 week ago, has gained the most overall strength and short-term strength. Apple has gained the most long-term strength. So now that you've seen what the screener looks like, and we've gone through a little bit of detail about how we can navigate the screener and use those different filters for both categorical and numerical numbers or values, let me share with you all a quick and easy way that you can start using the screener. First thing, we're going to go to the sector averages, sort by total count, and find the top sector. We'll then go to the screener and filter by that sector. So, filter by sector, we're going to use the top sector. Let's actually go and do that together. We'll go step by step. So, start off with the sector averages, sort by total count, find energy is the top sector. So we go here, filter by sector, plug in energy. Next step, filter by signal, and we want to filter to only show companies on breakouts, things on double top or triple top breakouts. So we go to filter by signal, double top, triple top breakouts. By the way, let's quickly look down here. 499 Filter by energy, already down to 23. Sorry, guess my head's blocking. Already down to 23. Filter by signal, breakout, both double and triple tops, now down to 13. We've gone from 499 companies to 13. And we haven't done anything crazy. We've found the top sector and filtered by that. And now we only want to see things on buy signals. The next step is we sort by total count. What this is doing, it is giving us the highest relative strength companies that are currently on buy signals in the leading sector. So we have taken the best sector, found companies only on buy signals, and we are now looking at the strongest companies in the strongest sector. And this is what that list looks like. Now here, things start to get a little bit more creative. You can use this data however you want. You can go to stock charts and start looking at point and figure charts, or coming soon to the matrix, you'll have the ability to look at point and figure charts on the matrix. In the meantime, look at any point and figure chart. See if the chart makes sense to you. Or you can stay here and still do more research. For example, if I wanted to buy a company that is moving up right now, what would I rather buy? A company that went on a buy signal on July 7th or July 11th? Or how about a company that went on a buy signal on Monday or yesterday? If you're looking for finding breakouts, companies that are on a positive trend, a upward price direction, are recently on buy signals, are the strongest companies in the strongest sectors, signal date's going to be your friend. Because now we're looking at companies that have recently gone on buy signals. Those signals are fresh, they are relevant, and we hope that whatever trend caused those buy signals continues. Now, let's say this list is too short. This is where you can go back to your sector averages. Alright, energy is the top sector. Technology ain't looking too bad either. Let's add technology. Now, we went from 13 companies. Good morning, you. Technology is a big sector. To 53. Now we have a lot more choices. But if we still sort by total count, yes, we have a lot more choices, but the choices are also a lot stronger. Remember FANG? The strongest sector in energy? Yeah. It comes in 9th. Once we put it up against technology companies. Did that remove the relevance of recent buy signals? No. Every one of these buy signals occurred either last week or this week. So all of these signals are still fresh. These are all companies on buy signals. We can look to make sure that their current columns are X's. And these are all the strongest companies within their respective sectors. Can we use this information to invest weekly and rotate like we do with sector rotation? Yes, you can. It's a little trickier because we don't have back testing for this. Part of a strategy, in my opinion, one that the decisions are kind of made by the strategy, I don't like using a strategy that I can't see the results, that I can't analyze to see its performance. Would I paper trade a strategy like that and experiment? 100%. But to me, I put a lot of value on backtesting, on analysis, and on results, even historical results, before I would consider using a strategy myself. Now, that's not to say that creating strategies like that are impossible with this data. It's definitely possible. There are definitely ways to do it. But again, I'm very data oriented. I am risk averse. I love doing analysis to help answer and clear up doubts. And that's not something that I can just tell you right now, oh yeah, instead of using a positive trend count of 2 or more, use a positive trend count of 137 or more. That's not something, unfortunately, that I know. Doesn't mean it's not possible in the future. That is something that we can explore, but today the answer is experiment with it, and if you find something interesting, let us know. But without backtesting data, I can't sit here and say, yeah, try this, this, and this. It'll make you money, I promise. Great question, though. Cool. So what have we done here? We have made a short list of companies, making our decision a lot easier. And again, we've now narrowed this down to 13 companies. So if you only had an hour to do your analysis, you can spend about 5 minutes on every company. Or you look at the signal dates. You ignore the companies that had signals over a month ago. So we could sort by signal date. Some of these signals were back in June, July. I don't care about them. I want things that have recently gone on signals. Oh wait, there's only 2 of them that have gone on signals. I could now spend a half hour on each one of these companies. If I only had an hour, I could spend a half hour on them. Or you spend the same amount of time, that 5 minutes that you would have given per company, you just saved yourself a lot of time. You didn't need to look at a single chart up until you've already narrowed down your search. The point of this is to save you time. The information should be simple. It is built off of point and figure. If you don't know point and figure, look at the green boxes. You can think about it with the green boxes. Green boxes, thumbs up. Red boxes, thumbs down. Simple as that. This will not make decisions for you. This will help you make more informed decisions faster and all in one place. So what did we just talk about? What did we actually do? Ignoring all of the steps, what we did was we found a list of the strongest companies in a leading sector that are currently on buy signals. We did that in what is, when I'm not going through and meandering through the conversation, what can be done in seconds. And again, this is only one way of using this screener. So, that brings us to what's coming up in Step Into Sectors number 7. Surprise, surprise, we're going to talk more about the screener. This screener is an amazing tool, and I want to show you more ways that this screener can be used to simplify your investments. Here are only 2 examples of what we will cover in next week's webinar. One example is how to find companies that have recently gone on buy signals. The opportunity here is being able to join in on the wave of people of this buy signal and be able to ride that positive trend as far as it goes. And another is how to use momentum to find breakout companies. This will work much more similarly to the matrix strategies, looking for companies that are moving in the positive in positive price directions right now. Companies that are gaining short-term strength. I will show you a quick and easy way to do that. And again, these are only 2 of the different examples that we will provide in next week's webinar. And while I can definitely fill up that webinar with awesome examples, we'd love to hear from you. Part of the enjoyment of this series and part of the goal of this series is to simplify Sectors Made Simple. You can spend hours learning each and every one of our tools. Our tools are built with many purposes, many skill levels, and many end goals as we can possibly stuff into these tools. That doesn't mean, though, that what you want doesn't matter. We want to hear from you. So if you're watching this webinar, please send us an email. Our email is support@sectorsmadesimple.com. And if you have any doubts about, hey, can this tool be used for this? Can you show me a tool that's used for that? If you have a way of investing, you don't want to change your way of investing, but you want to know if our data can make your process simpler, send us an email. Love to hear from you, and we'd love to help you as well. Part of our goal is to give you ways of investing, and especially as we get further into this series, and as you get further and further into your confidence as an investor, we also love to show you tips and tricks to help you invest your way. Not change the way you invest, show you how you can continue investing your way with more knowledge, more resources, and in less time. That is the real goal at the end of this all. So, thank you all so much. If you have any questions live right now, I'd be more than happy to answer them. So please feel free to put them in the chat and let's talk. Romulo, can we use the screener to play with options? Immediate term options, so options expiring today, would be a little tough. This data is updated daily, but does take a little bit of time to run. So right now, we are looking at the data from Thursday, October 12th. If you look tomorrow, on Saturday, you will have Friday's data. So the matrix is always from the previous day. This data is also from the previous day. So if you're trying to day trade options, it might not be reactive enough. But if what you're looking for is a company to invest in options that expire maybe at the end of the week, or monthly expiration options, anything that is a longer time horizon than 1-day expiration, 2-day expiration options, 100%. You can use this because, after all, options will follow, to a certain extent, will follow the price of the underlying security. So if what you're looking at is an option for Apple, movement in the price of Apple will affect the price of that option in the exact same directions. So positive price movement will increase the value of options, negative price movement will decrease the value of those options. Similar directions of returns, just options will amplify those returns quite a bit more. So, simple answer, yes. You can use it with options. Just remember, this data is, just like the matrix, from the previous day. So any sort of day trading on 3 or 5 minute bars, this might be a little tricky. Does anyone else have any other questions about the screener, about the strategy that I talked about, anything? Because if there are no more questions, then this is where we will leave things for today. So again, a special thank you to everyone that joined us live for this video. If you're enjoying these webinars and you want to have your questions answered live, or just join in on the conversation and the fun, we do these webinars live at 4 p.m. Pacific time, 7 p.m. Eastern time, every single Friday. So, we hope to see you back next week for the continuation of Step into Sectors as we go further into this series of Step into Sectors and further into the S&P 500 screen. So, on behalf of myself and the entire Sectors Made Simple team, thank you all so much for joining us today. Have a great and safe weekend, and we'll see you all back next week. Take care.